Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is August 19th, 2025, and we're diving into the latest earnings report from Toll Brothers, the nation's leading builder of luxury homes. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Toll Brothers has just released their third quarter results for fiscal year 2025, and there's a lot to unpack, from their revenue growth to strategic initiatives in the luxury home market.
Revenue and profitability overview. Let's start with the top line. Toll Brothers reported home sales revenues of $2.88 billion for the third quarter, a 6% increase compared to last year. John, can you elaborate on their profitability and how it compares to expectations?
Absolutely. Toll Brothers achieved a net income of $369.6 million, translating to an adjusted earnings per share of $3.73. This beats the analysts' forecast of $3.59 based on a survey of 7 analysts. Their home sales gross margin, however, saw a slight decline to 25.6% from 27.4% last year, indicating some pressure on margins despite the revenue growth.
Operational efficiencies and strategic initiatives. John, Toll Brothers has been focusing on operational efficiencies. How have they managed their selling, general, and administrative expenses this quarter?
They've done quite well in this area. SG&A expenses were 8.8% of home sales revenues, an improvement from 9.0% last year. This indicates better cost management. Additionally, they repurchased approximately 1.8 million shares, returning $201.4 million to shareholders, which is a strategic move to enhance shareholder value.
And what about their strategic initiatives in terms of pricing and contracts?
The average price of delivered homes was $974,000, and they signed net contracts worth $2.41 billion. While the contract value remained flat, the average sales price of new contracts increased by 4.5% year over year, reflecting their focus on the luxury segment.
Market conditions and future outlook. Looking ahead, how is Toll Brothers positioned in terms of market conditions and future growth?
They have a backlog valued at $6.38 billion, although it's down 10% from last year, with 5,492 homes in backlog. Their financial position remains strong, with $852.3 million in cash and a debt-to-capital ratio of 26.7%. This solid financial footing allows them to be selective in land acquisitions and poised for growth in fiscal 2026.
What are the key risks they face in the current market environment?
Affordability pressures and uncertain economic conditions are ongoing challenges. However, Toll Brothers' focus on the luxury market and affluent customer base provides some resilience against these headwinds.
CEO insights and strategic focus. John, what insights did CEO Douglas C. Yearley Jr. provide regarding their strategic focus?
CEO Douglas C. Yearley Jr. emphasized their strategy of balancing price and pace to maximize profitability. They spent $432.7 million on land acquisitions, which is crucial for future growth. With 420 selling communities, they are well positioned to meet demand while managing spec starts to match local market conditions.
How does this strategic focus align with their long-term goals?
It aligns well with their goal of delivering value to stockholders and positioning the company for success in fiscal 2026 and beyond. Their disciplined approach to land acquisition and community growth supports sustainable expansion.
Key takeaways. In summary, Toll Brothers has delivered a strong third quarter with impressive revenue growth and profitability. Their strategic focus on the luxury market and operational efficiencies positions them well for future success. Key takeaways include a revenue of $2.88 billion, an adjusted EPS of $3.73, beating the forecast, a backlog value of $6.38 billion, and a debt-to-capital ratio of 26.7%.
Indeed, Toll Brothers continues to demonstrate resilience in a challenging market. Their focus on strategic land acquisitions and community growth is commendable.
Thank you for joining us, John. And thank you to our viewers for watching. Don't forget to like, share, and subscribe to Smart Stock Watch for more insights. We'd love to hear your thoughts on Toll Brothers' performance in the comments below.